Hello everyone, welcome to this special video which I have with me Raghunath from Hyderabad, and we are launching a very new tool in OPSTRA which is called Optest, and this is a very unique tool which does options backtesting, and it is definitely different than the backtesting or the simulation which we have currently in OPSTRA. And this, in fact, people will remember that this was announced in the last DECMA in September. But that time, of course, it was under development, and so now it is ready and we are launching it, and most probably by Monday I think it should be accessible. So welcome Raghunath, and let's have the complete information from you.
Yeah, so Optest options backtesting is a new tool that we are going to come up, and this will be not part of OPSTRA. This will be independent of OPSTRA, just to clarify.
Okay.
The idea behind this backtesting system is that we used to have EOD backtesting system in OPSTRA, but there are certain drawbacks of EOD backtesting, and to give more options and to give more control in backtesting the option strategies, we have designed this options intraday backtesting system, because the backtesting will happen at 1 minute level and 5 minute level in case of stocks, and 1 minute in the case of in the indexes like Nifty, Bank Nifty.
Okay.
So that's a main reason behind that. And another reason is that we can add many more technical analysis tools, which we are going to talk about later, that can be added in this kind of backtesting system, which may not be possible in a EOD backtesting setup.
Right.
So this will be totally different kind of backtesting system, and perhaps this is very unique and may not be there elsewhere, because we are not just showing indices, but we are also going to show backtesting for the stocks as well. And we will keep on improving this system with, of course, user inputs as well. So let me begin by telling the users that what you will get from this options backtesting system.
Yeah.
So remember, the name of the backtesting tool is Optest. It's nothing but options backtesting. So what do you get in this? The first thing is that we can do backtest of intraday and positional option strategy. Intraday, so when we say intraday, it means that the entry and exit will be on the same day. So let's say I want to test a short straddle, short triangle, or iron condor, or any other option strategy, or in any particular ticker. It could be Nifty, or it could be HDFC Bank, and I want to test within that particular day what will happen. So then I can use the intraday backtesting system. So the entry can be defined, and exit can also be defined, and you can also define stop loss and target. So that is the meaning of intraday backtesting system. So entry and exit on the same day. And positional option strategy, the entry can be on several criteria. Either you can choose the entry time and entry date, and the exit will be based on stop loss or target price, or you can also define when you want to exit these positional option strategies. In this case, barring there are some stop loss hit, like 99% of time, this will be entry and exit will be on 2 different days. Okay. So that is the difference between intra backtesting and positional backtesting.
So when you say positional backtesting, we had also covered it in our options talk long back. The famous strategy for iron condor on weekly. So there is a theory which a lot of people do of an entry on Friday at, let's say, 12 o'clock, 12 noon, and exit on maybe Tuesday closing. So that can be backtested.
Yes, that can be backtested in the positional option strategies. Then we have, so in the backtesting also, there are different methods. And they're just not focused on, the most commonly used short straddle and that kind of strategy. But we'll have much more variety of backtesting methods. Like we can do directional backtesting, non-directional backtesting. We can also do volatility crush backtesting, which is not possible in EOD backtesting system.
Yes.
And then we can do earnings oriented backtesting and technical oriented option strategies backtesting. So technical oriented, it means that we will use some kind of technical analysis generated signals to enter the option strategy.
Okay.
That's what I mean. So this can be done both on stocks as well as indices.
Your introduction itself is so exciting that I can't wait to see the demo.
Yeah. And the best part is that, and this is where I think we are trying to bring something very unique for the first time, is that you can actually visualize each and every trade, every backtester trade. So let's say you did an intraday backtesting system, there will be so many trades, but you might see that somewhere in some trade there is stop loss is hit. So you want to inspect that trade, why that stop loss has hit. So you can go individually to that trade and inspect what has happened. So which I will demonstrate via the tool.
Yeah.
So you can visualize each and every backtested trade via table, like, table in terms of for each time point, what is a premium and what is a PNL and all that. So you will have a table of all that. And then we'll have a chart where we'll show the progress of your returns. And then also the progress of your individual legs. Let's say you have a short straddle. So you can see also the individual legs of call option and put option, how their price has changed. And then also you can actually simulate that option strategy. So let's say you did a short straddle backtesting and you want to see on one particular trade how that has progressed over time. So you can actually simulate that option strategy there itself. And I'm going to show something very exciting there. You will find it very interesting there. I'll show it as part of demo. Now finally we'll have a neatly summarized backtesting result with overall PNL, returns and equity curve, and there are also some other useful information as part of summary, which I'll show in the demo. So you might be asking that, when we are going to release this new backtesting system. So you don't have to wait much. This coming Monday, we are going to do a beta launch, which is on 28th August of 2023. Then you can access this backtesting system. So this will be free for all OPSTRA Pro users for a month in the beta phase. So this is a beta launch. So during the beta phase, we are going to make it free for all the OPSTRA Pro users only. Okay. And the backtesting in this beta phase, we are going to allow only last 2 years of data to be backtested. So because we want to, we will open 5 years of backtesting data when we are officially going to launch a paid version, which will be around October of 2023, around 1.5 months.
What you mean is, when we launch the official paid version, it has nothing to do with OPSTRA Pro. It will be a completely unique, different, separate product in itself.
Yes, this will be a totally different product, and during that time, it will not be free anymore for the Pro users. And we will have a special package for Pro users, which we will announce during that time, so that you can also get access to this particular backtesting system. And we are going to add more technical analysis methods, which I'm going to talk about, like Renko PNF, that will be added in future. Yeah, that will be the most exciting part, because I think nobody has done something like this anywhere in the world.
Yeah, this will be the.
So
in fact, that will be most exciting. I will boldly say this will be something like first time in the world.
Yes, exactly. So that will be the most exciting phase. So this we will do before the official launch. Okay. And then again, more backtesting methods and strategies. Obviously, I'll show all the backtesting methods. and more strategies. Already there are a lot of strategies we have added. And if you want more backtesting methods or strategies that you want us to add, we are going to take that input and we are going to add that in our backtesting system.
Basic question: how long has work been going on this? 1 year?
Yeah, a little less than 1 year.
Yeah.
And yes, and because
Yeah, so
it is a little bit.
This is the result of an effort of more than, or like you said, almost 1 year, and
Yes.
so many people have contributed to that, and of course the brainchild is his on his own. So I
Yes.
can't wait now. Go ahead.
Yeah, yeah. So now, so this is how the backtesting system will look. This is Optest option backtesting. So here, so as I said, there will be two of them: intraday backtesting system, positional backtesting system. So let's go one by one, and I'll explain all of these things. So in the intraday, which is I think the most exciting part for me as well as I think the traders.
Yeah.
So here we have two backtesting methods here, which is non-directional and directional, and we will have some more methods here as well in the beta phase. So basically, what we are saying here is that like non-directional strategies, you choose non-directional, or directional, you'll get the choice of directional option strategies. Okay. Now, so once you choose the method, then automatically these strategies change as per that. So if you choose directional, again, as you see, the list has changed. So we'll choose non-directional and we'll choose short straddle. So here you can choose whatever strategy you want. So you have the most common and most widely used strategies readily available. And then here you can choose the tickers that you are interested in. And here one thing I want to clarify is that we are not going to include all the tickers that are there in FNO. The reason being is that not all stocks are liquid. And if the stocks are not liquid, and if you provide that in the backtesting system, the entry and exit might give wrong information because of liquidity issues. And because you have wrong information, you might conclude something wrongly because of liquidity issues. That's why
I want to say here, because we have been getting a lot of requests over the last 6-8 months to introduce Fin Nifty, Mid Cap Nifty, Sensex in simulation as well as backtesting. Like you said, the major problem is in the old days when Fin Nifty options started, they were not liquid at all. And you will definitely get wrong results on simulation when it was not liquid. Same thing with mid cap Nifty. So that's why we don't provide the data for simulation on those when they were not liquid. Only when they become liquid, then in the future we will add that to simulation and OER.
Yes. So basically, as some stocks gather liquidity, we have actually added more stocks in the simulator, and that will be the case also in the backtesting system. It's very important that liquidity is there, because if you do on an illiquid FNO stock, this options backtesting, you will get wrong information and wrong conclusions.
Yes.
And that may not be ideal for anybody to take those conclusions and deploy in real trading.
So right now, how many stocks are there in this?
We have around 50, 60 around, which are very, I think, decent number of stocks. Because not every stock is liquid. So we have took the top 60 or so, and those stocks are added in this. Okay. So now, then we can select the backtest begin date. So here we have a calendar, and here you can check, you can go by year. Like, I want to go, let's say, to 2021, January, and I can also move around February, March, like that, and choose the date. Okay. Like, for example, I choose this and select. So 1st of January in 2021, right? And the same way, you can also select the backtest end date. So by default, this end date will be the last monthly expiry. So in this case, it's 27 July.
this brings me to another funny thing which happened. A lot of people ask, simulation may have, we want current expiry also, but that is not what it is. It is for something which is already over.
Yes, yes, yes. And so here we also conveniently provided in periods, and in a later phase we'll provide more range
5
periods.
years.
But you can simply check, 3 months, 6 months. Automatically, your begin date will change. 1 year, as you can see, it's changing. So,
yes.
So let's say I'll take around 3 months now, and then expiry type you can choose monthlies or weeklies. So, so if you want to do intraday backtesting on monthlies, it will choose monthly options. If you want to do on weeklies, it will choose weekly options.
Yeah.
So I choose weeklies because that makes more sense in the case of intraday backtesting system. And then here we have the classic, the most people say this time-based straddles. But this can be anything. It need not be 920. It's totally up to you which time point you want to enter and which time point you want to exit. Okay. So and then you can also choose, like, let's say I want to test this backtesting system only on Mondays, this intraday backtesting only on Mondays, or only on Tuesday, or you can choose all of them. So by default it is all. So we'll choose only all. And then IV percentile above and below. So like for example, IV percentile, what it does is that it tells how high or how low your IV is or the VIX is. Right now the VIX is very low. So maybe it doesn't make sense for somebody to do a short straddle when the VIX is very low. So you can say that, okay, don't do this strategy if the VIX or IV percentile in the case of stocks and Bank Nifty. So do only if it is greater than 20 or 30. So that way you avoid low premium kind of situation. For now, we'll choose 0 only. If you choose 0 means it takes all conditions. Okay.
Everything,
yeah, everything. And then we have stop loss. Now here, stop loss we consider it as a percentage of premium. So let's say your premium of, if your premium of short straddle is 100 rupees, and I say stop loss of 30%. So it means the straddle has to hit 70 rupees for that to exit that. Okay. So same way the target, again, it's a percentage of premium that is there.
1 minute, you're talking short straddle, right? So if it is 100, if it goes to 130, it will be.
Sorry. Yes, 130. And target will be 70.
Yeah.
So yeah, it's other way around. Yeah. So that's how the stop loss and target is chosen. It's not absolute. It's always as a percentage of premium because the premium can change every time. So if you use some absolute method, then that may not make sense. So that's why we choose stop loss and target as a percentage of premium. It's same for short strategies as well as spreads as well as long only strategies. And then we have strike selection method. So in this, we can have just delta based on delta. So when you choose short straddle, it's always 50 delta call and put strike, right? And then if you want to choose points, you can also choose points, like, choose something 300 points away or so 200 points
ATM,
away.
Right?
0 will be ATM by default. Yeah. And then you can also use percent. So percent in the sense, like choose a strike, let's say some minus 1% away from the current future price. So you have different selection methods. So either choose delta, either you choose the width of the points, like in the case of Nifty Bank Nifty, and you can also use a percent selection. How far away you want to select from the current future price. Okay, so we'll choose delta by default, and you can also choose the slippage. So let's say, different people have different slippage. For example, somebody who trades with a huge quantity, they will have slightly higher slippage. Somebody who trades with smaller quantity, they will have lower slippage. So depending on how you trade in your trading system, you can choose your slippage 0.22, 0.3, 0.4. It's totally up to you. So by default, it will be the slippage. It's nothing but the impact cost when you enter and exit the trade. Now the margin required. Now this is something very important because it is difficult at this point of time to calculate what was the margin some days ago, right?
Yes.
2 years ago it will be something. 1 year ago it was something. Because Nifty changed the margin calculation system through time. So that's the reason what we have done is that we will leave totally up to you what margin you want to begin with. So one convenient thing what we have done is that by default we will show what is the margin requirement currently based on current expiry for this particular strategy. So current strategy for Nifty, this is the requirement around 1.4 lakh. So you can choose that as your, the margin requirement for all your trades, or you can choose some other value, depending on whatever you have observed in your trading.
Yeah.
So conveniently we have provided this value. So if you leave that by default, the margin will be based on the current expiry margin requirement for this particular
everywhere I see
strategy.
a question mark here. So whenever you click on the question mark, I believe you get the info about that, right?
Yes. So we'll explain a little bit more, like what that implies and what else you can do. Let's say you want to say that I don't want to use this particular one, I want to use 120,000. So it's totally up to you. So we use the default one right now. Okay. And as I said, depending on the strike method, you can choose the delta. So you can choose 50 delta, or you can go a little bit out of the money to choose your delta. But let's put as a default. Okay. So we'll start backtesting now.
Yeah.
So it will take some time. So it depends on how long the period is, and shorter the period, the quicker it is. So now we got the results. So
basically you have backtested for the last 3 months short straddle on all days of a week for weekly expiry.
Yes.
Yeah.
So now this is a summary that you get for this short straddle in Nifty. And as you can see, this is the capital employed, and these are the returns. So this is the average gain for each trade, and these are the gross gains, and these are the average loss per trade, and these are the gross losses. And these are the number of trades in the last 3 months. And this is the win rate, and this is the profit factor, and what is the total PNL. As you can see, the maximum, it also gives a maximum drawdown. If you click on this, it actually shows what is the drawdown. So as you can see here, how the equity curve has developed, and how the max drawdown has developed for this particular strategy in the last 3 months. Okay, so that you can check by clicking on this chart icon. And this is a win-loss ratio. So win-loss ratio is nothing but the number of win trades divided by loss trades. And the profit factor is nothing but gross gains divided by gross losses. Okay. And then we also have this yearly calendar. Like we distribute the profit as per on which month that backtesting has happened, or that particular day falls. So if I click on July, I get the what has happened in July. Okay. What has happened in the July expiry, or what has happened in the June expiry. So like that, you can see what happened for that particular intraday strategy on any given particular day. For example, in June, all the Wednesdays gave some kind of loss, and like this. And then if you go to the table, and this is the table where you can look the summary for each and every trade. So what was the exit entry time and what was the exit time? What are the strike prices that are involved, and which expiry was used? So let's start the backtesting. So it will take some time depending on the period selected. So longer time period will take more time, and lesser time period will get the results quickly. As you can see, this is the summary for that particular strategy in intraday backtesting system for last 3 months. So this is the capital employed for each trade. So we are on an average we are taking that much, and this is the average PNL for each and every trade, 256 rupees, and the average gain when there is a gain happen is this much, and the gross gains is 40,000, and average loss when the loss happened is around 1100 1200 rupees, and gross losses, that is total losses, is around 24,000. And this is the number of trades, and this is the win rate, and this is the profit factor, which is nothing but gross gains divided by gross losses, and this is the total PNL. And this is the maximum drawdown for that particular strategy in 3 months. If you click on this chart icon, it will actually show the progress of the equity, how the profit has over time has built up, and what is the maximum drawdown. So this is a maximum drawdown on 9th June. And the win-loss ratio. Win-loss ratio nothing but number of profit trades divided by number of loss trades. So these are good indicators on how the strategy is doing. And these are the maximum consecutive wins, and the maximum consecutive losses, and the number of profitable trades and number of loss trades. And below, we also have a calendar where we distribute the trades depending on which month they belong to. And as you can see, in July, there are 19 trades that has happened, and the total profit in that month is 10,000. So if you click on that, you will get what has happened in July month of 2023. So here you can see what has happened, right? And same way you can look at the June month. So what has happened on each and every day. And below you can, if you go here, you get a table, the summary table for that short straddle. And here you get summary for each and every trade. So what is the entry and exit time? What are the strikes used? And what was the expiry used? And what was the future price when that particular trade was entered? And what was the entry price for that particular short straddle, strategy price? And what was the exit price? And IVP? And what was the lot size during that time? And the PNL, and what was the return? So return is nothing but based on the initial entry price, right? The premium, initial premium. And what was the exit reason? So was it because of stop loss, or was it because of target hit, or was it because on the time that you have chosen? So if stop loss is not hit, and if it is target is not hit, so it will exit at 320, right? That's what we have chosen.
Tell me one thing. Here the first one is stop loss of 30% hit, but return is showing minus 25%. Why is that?
Yes. So what we are doing is that, so now the good part comes here. So when 30% stop loss is hit, we actually enter in the next available candle, so which is the next minute. Because if you look at practically, you cannot get the stop loss at the same time and exit at the same candle, right? Because here we are taking 1 minute candle. So practically, it doesn't make sense to exit on the same candle. So we chose to exit on the next candle, so which you can see here. So now the good part here. So as I said, you can dissect each and every trade what has happened. So here this is how returns have developed for that particular trade. So overall it was going not much big loss, going and suddenly it fell. Why? Because
can you scroll it down? What is the red line?
These are returns.
Acha, return, okay.
Yes. Okay. So this is, as you can see, these are at 1335, 30% stop loss hit, and we exited at the next minute.
And the reason is also very clear, because Nifty went up. That's as simple as that.
Yes. So yeah, that's the reason you know exactly what has happened here.
Yeah.
And if you look at the position chart, you also know because of which leg that loss has happened, right? So the blue line is strategy price, which is in this case is a short straddle.
Yes.
And your put option went down, and the loss happened because of the call option. Because obviously market went up, so the call price went up, and your strategy
Right.
price also went up. And that's the reason we have exited this strategy at that stop loss. And if you come to if you want to simulate this particular strategy, you can actually simulate this strategy. So all you need to do,
you can replay it.
yes, we
Okay.
can also replay it. That's a best part here, because all you need to do is simply play it.
Yeah.
So now I enter this strategy at 9:20, right? Now I can choose different time frames, 1, 5, 15, 30 minutes. I choose 30 minutes, and I say you can also do manually. You can also say go 1 minute, 5 minutes, 15 minutes, 30 minutes.
Like our
Or
simulator.
you can just play it. Yes, like in our simulator, OPSTRA simulator.
Yeah.
And now you play. Okay. Now you can see here it is developing. And you can also see what is the PNL and Greeks that are happening.
Oh, yes.
Okay. So at 120, at 120 it exited because I chose 30 minutes. So at 120 it is exited at this PNL.
Yeah.
Yes. So that's how we can see. So maybe it is at 116, I believe. So let me check manually. So final exit time, yeah, it's actually 136. So yeah, 840 we exited.
I have had a sneak peek earlier, but when you show it, I can see it in much more details.
Yes, and also you can follow the Greeks, you can follow the PNL and everything in this. And also you can directly go to the final exit time. When it exited, you can directly go click on final exit time. It will take to that exit time 136, and then you can see what was a PNL. And that's exactly is a PNL. And you can also see the scroll, and you can see at each minute what has happened. Each minute we can check. So you said no, why it didn't showing 30%? Because at 135 it hit 30% and it exited on the next minute.
Okay,
so that's so you can actually, I mean, you can each and every trade you can look in very detail in multiple different ways: chart form, table form, simulated form. So that's I think it's a very big addition in this, and nobody has done something like this.
Yeah, I mean this will take a few weeks, few months to study entirely.
Yes. And as exit reason, as I said, different exit reasons, as you can see: target hit, stop loss hit,
exit on time,
and
also.
in future in tech, exit on time and all that. So there's so much information.
Exit on time will always be the profitable trades.
Yes, always at 320.
Yeah.
No, it need not be at profitable. It can be also at loss.
Okay, not small. Yeah, not a stop loss, maybe small loss. Yes.
Yes. That's right. So like this is a minus 4.85%.
Right.
So yeah, so that's kind of information you can get from this kind of intraday backtesting system, and you can check different strategies and all those things, directional, non-directional. So now let me move on to positional backtesting system. So here you have much more variety here. So you have pre-earning momentum, post-earning momentum, non-directional, directional, technical trading. Okay.
So this is something
now
similar
here,
to the existing backtesting. Only thing is it has intraday feature in it.
Yes. So your entry and exit will be based on intraday timing. So there you have much more control in terms of entry and exit. So here, for example, so pre-earning momentum. So why we are saying pre-earning momentum? Because usually what happens before results are announced by quarterly results are announced by companies, there is some insider information or somebody thinks that this stock is going to announce good results. Usually observation is that that usually the stock rallies before the results are announced. So for example, here I am taking a pre-earning momentum method, and I'm choosing long call because I'm thinking that stock is going to go up. And here is a backtesting begin date and end date. So let's say I will do it for last 2 years. Okay. And I enter the trade 8 days before the results are announced. And I exit the trade 1 day before the results are announced. So I don't want any result risk. If I don't want any result risk, I exit 1 day before. That's the idea behind the pre-earning momentum. And same like, we take long call, 30% stop loss. So you can change your, target and stop loss as per your wish or observations in your trading. And I choose at the money call, so delta 50 and slippage 0.2%. Okay, now I do start backtesting on this. So long call Axis Bank.
So this happened in a couple of seconds.
Yeah, this is fast because the number of trades are only 8 because it's a quarterly announcement, right? So it's very quick. So I mean, here as you can see, it is a very nice trade. So it took 8 trades. So in last 2 years, there are
8 quarters.
4 quarterlies in a month. So 8 quarterlies in 2 years. And so 8 trades. So win-loss ratio is 3. So 6/2. And profit factor, the gross gains by gross losses. And 75% win rate. So this is a very good thing. And max drawdown is very high. See, the max drawdown is usually very high in long only strategies.
Yes.
Because the initial premium is, very less.
Correct.
Compared to what you use in short straddle or short strangle kind of strategies. So here we average capital employed is based on the premium that was taken for each and every trade. And we take the average of all those premiums and show as an average. So here you can see the equity curve, overall it built up like this. So this was a drawdown. Even in drawdown, you are still profitable. But yeah. So now you can see in October this happened, and then April, July, October, January, April, and July. Yeah. So like that, again, you can see the summary here. So why we exited and how much return we got. So here, if you are wondering why 52% despite a target of 30%, again, the reason is same.
1 minute.
There's a big gap opening.
Okay.
Or there's a huge increase in that thing. Yes. So by 50, because it suddenly went to 21 to 50, above 30. So we exited on the next minute. So this is the thing.
So this was a big move in just 1 minute after market open.
Yes, it was a very big move. So this is as per options. So we don't know how the liquidity was at that point of time. Okay. So this is, as you can see, for pre-earning movement. So now if you take post-earnings, so I'll take Axis one Ashok Lay. So here what we are saying is that in post-earning, so let's do something here in post-earning. In post-earning method, you can also do volatility crush. Yes. So AP, I mean, this we have talked, many of our option stock that just before results are announced, the IV is always very high. And the moment results are announced, it crashes the implied volatility, which is nothing but, options premium. So options premium immediately crashes after the results are announced. So we use something called as a volatility crush method. So in this method, what we are going to do in this, which we can do in post-earning method. So I am saying that on the day of result, on result date, okay. On the result day, so 0 days after result date, nothing but on result day. So so depending, so here this is invalidated in any case, the entry time. So you enter the result after 20 minutes after it is announced. So let's say it is announced at 10 a.m., then the trade is entered 20 minutes after that.
Okay.
Okay. So here the ideal strategy will be short straddle, because that is a short volatility strategy, right? So we use short straddle, and I'm saying that enter this strategy after 20 minutes when the results are announced. Okay.
Yeah.
And this is a margin required, and all defaults, let's say. Now let's do backtesting on that.
And what is the exit?
So exit is at 320 or stop loss or target.
Yeah, it's a same day exit.
Yeah, same day exit.
Okay.
Because it's 0-0. So it's a purely volatility crush strategy. So now you can see here, it took only 2 trades. Let's see why it took only 2 trades. So both of them gave profit, and it's looks very nice. Nice equity curve, no drawdown, and 4,000 in 1 month, and another month 7,500. These are the 2 methods. So on 29th of July at 149, it has entered this strategy. Okay, at 149. So now if I go to results calendar of Ashok Lay, 29 July 2022 at 129, Ashok Lay has announced the results for the quarter 1. Okay, 129. And we entered at 149 exactly.
Okay.
And by 320, we are in profit, this much profit. Same thing happened on 21st of July 2023. We entered at 1125. And again here, 11.5 was the announcement time, and 11.25 we entered the trade, 21st July 2023. So why we didn't enter in the other quarters? Because they were all announced post market hours.
Okay, so they were not results during market hours. Yeah.
Yes, only those 2 are during market hours. So we also take that into picture.
For my case, I think if you test it for Reliance, you will not get a single trade, because most of the times Reliance announces it with aftermarket.
Yes, exactly. So somebody, I know many people personally who do this kind of volatility crush strategies, and for them this is very nice for this thing. But ideally, for post earnings method, what we do is that we enter one day after result, and we hold it for 5 to 6 days, let's say, and then we do back testing on that. So in this case, it was a loss. But yeah, so that's the idea. So idea is that, see, over time, the volatility will keep on going down. So you will benefit from short volatility strategies, though it didn't work out in this particular case. But in different stocks, it might have worked. But that's the idea behind the post earnings strategy. Yeah. And non-directional, directional, you already know, which you have done intraday. This is pretty similar to that one. So this is something you will also see in OPSTRA backtesting method, that in EOD backtesting. It's the same. So let's say I want to enter. If you choose Nifty, I have choice of monthlies and weeklies. I want to enter 30 days before expiry and enter and exit 7 days. Let's say 13 days is a good, actually 13 days before expiry and 7 days before expiry. If I do some kind of short straddle strategy on that, how it will perform. This is a positional non-directional backtesting method. So as you can see,
in fact, this is a very old theory, short 13 day straddle for 1 week.
Yes, exactly. That's the one. So different months have different results. So you can see in November. So you can see all the trades. You can go and see what will happen there. So every time it has hit stop loss. So this is in 2021 when the market was going in one direction.
Yes.
So if I actually open this particular trade, you will see something like that. So in this case, it actually went down on those particular day.
Yeah.
So because it exited within 2 days, actually, couple of days. Yeah. So yeah, so that's the reason this exited. So finally, let's all look at the technical backtesting. So the technical backtesting is nothing but, if you take any technical indicator on line charts, okay. So those things we can backtest here. So let's say I want to enter Nifty when it crosses about 10 EMA, okay, but it should be above 50 DMA, something like that. Okay. And backtest this particular condition, okay, this condition on 15-minute time frame. You can use 5-minute, 15-minute, 30-minute, and daily. So you can choose time frame also on which to backtest. So we will use futures for backtesting this particular condition. So if this condition is met and we got a signal, then we enter that particular strategy. Okay. And we will. So once we got an entry, so then we will exit 10 days after that. After entering that particular strategy. Okay. So this is a bullish kind of condition. So I use a long call.
Yeah.
Okay. And then let's see backtest last 2 years. Yeah. I hope that conditions are met.
Yeah, I'm sure it will be there at least a couple of times.
Yeah.
Because in every correction, Nifty did close above 10 EMA. This is a daily moving average, right?
No, this is a 15-minute time frame.
No. When you say stock price crosses above 10 EMA, this is on a daily moving average or 15-minute?
No, okay. Actually, it should be SMA actually, but basically based on the time frame you choose. So you take 1550. So it didn't give good results in this case. But yeah, I mean, you can check different conditions there. So maybe we check, let's say, Axis Bank, for example, for the same condition. Maybe I chose a wrong condition. I don't know.
Yeah.
But basically, yeah. So you can do different conditions, and I'll show you all conditions that you can choose, and then add to the system. And based on that signal, it will take entry, and it will exit based on how many days you want to stay in that trade. So if you want to exit in 5 days, it will exit in 5 days. And if you chose 10 days, it will exit in 10 days, like that. Yeah. So for example, in this case, okay. So there are big losses and also big gains as well. So there was in this particular month.
Of course, instead of 10 days, you can also put a stop loss of percentage, right?
Instead of 10 days, exit how many days?
No, I'm talking about you can have a stop loss.
Yeah, it is there already.
Achha, okay.
Yeah, it is there already. So stop loss is it in most cases. So yeah. So yeah, as you can see, there are positive trades, there are negative trades. So you have to work out what condition works for you, and you can check all these conditions on TradePoint or Zone to see if they are actually meeting those entry and exit conditions. So in this case, yeah. So again, you can open it and see what has happened. So because there's a lot of data, sometimes it takes time to load, because you can see there's so many rows. So yeah. So as you can see, why this trade went up, because the market went up after getting the signal. Yeah. So AP, these are the different things that you can do, and these are the different technical parameters that you can use.
Oh, there are so many parameters.
Yes, so many parameters. Number of down days.
Seriously crazy.
And yes, and this is where we are going to add the Renko patterns, PNF patterns, and
Okay.
all those double top buy, double top sell, all those kind
Yeah,
of
yeah.
conditions we are going to add here. And another thing we are going to add in intraday backtesting is that we, for example, there are people who do these short strategy, short angle strategies. Let's say you entered a short strategy and you hit a stop loss. And again, if you want to re-enter the strategy, you can have that kind of condition given in the backtesting, and you can backtest those kind of strategies as well. That will come in the during the beta phase. We are going to add those kind of strategies as well. Intraday technical backtesting systems.
Yeah.
So suggestions and feedback are welcome. And as I said, we are going to add as many backtesting strategies, methods, technical parameters that you might want. Like, in technical parameters, if you want more parameters, we will add, and then we take it from there, how you want it.
Yeah, so like you said, your suggestions are most welcome, and you can definitely suggest what more features you want in terms of maybe the technical parameters or maybe something else altogether. So, like you said, it is still under beta stage, but you can take a trial for till the time it is launched. And even in that period, if you have any suggestions, you can definitely give them. We are always open to new suggestions.
Yeah. Okay. Thank you, folks.
Okay, so I think I have never been so excited looking at something new, and I'm seriously looking forward to trying my hand at it. And though this was announced long back in September last year, as I said, a lot of people were asking कि कब होने वाला है, कब होने वाला है. So now you can say sabr का फल मीठा होता है. And रघुनाथ के घर में देर है लेकिन अंधेर नहीं है. So thanks Raghunath, it's a brilliant tool, and I'm sure it will be helpful to any kind of options trader. I mean, whether it is Greeks based or technical based or intraday trader or positional trader, index, stocks, anything. This is going to be a real helpful tool for everyone. So thank you, Raghunath, and thank you everyone for joining us. And do share this video, subscribe to our channel, and also like this video. Thank you.
Yeah, thank you.